In this recap video, we're gonna go over all the trades that I took, why I got into them, what was the trade setup for them, and here are all my entries and extra prices for this week, all the callouts that I did in my Prodigy tab, on my Discord. And if you guys want to join the Discord, go on the link in my bio. There's two options. You can either join the free server or you can join the premium service where you get call out. Now, with that being said, let's share our screen and show you guys why we entered on the first trade, how we could have done better, what we need to do and take in for the lessons from this week to next week, because there are many things we could have done that's better that we would have gained way more value in our contracts instead of selling a little bit too early. Let's dive right into it. So the first trade that I took on Monday, it took me a while to actually get my first trade, and it was because market wasn't doing anything in my favor. I was actually waiting for puts to the downside at 568.44. As you guys can see here, I have a level here. I was waiting for puts there, but we never got it. We actually ended up doing a nice little hammer here. As you guys can see, I love reading candles. Candlesticks are my favorite thing to do, and you get a nice little long hammer, decent buyer volume. You guys see the buyer volume is pretty crept up, and that's why we bounced there. Bulls took over. The reason why I took my first trade is because you guys can see this level right here at pre-market low, which is 570.25, is a very specific level that I decided to take puts on, and I'll show you guys my entry here. So as you guys can see, market is doing their absolute best to hold this pre-market low level as best as it can. Every single time we get a candle close above, it tends to bounce there just a little bit. Now, the reason why I called out this trade in the first place is because this candle right here is a breakdown to the downside below pre-market low at 570.25. So as soon as we get that breakdown to the downside on pre-market low, I decided to wait for the next 15-minute candle, see what it's going to do, if it's going to continue down for more downside action, and we did get that in this case. So as you guys can see, here's the call out here at 12:15 p.m., literally 45 minutes before the market even closes. I called out a SPY put for $180 a piece. And instead of taking the same day expiration, which is a little bit risky since the market closes here real soon and theta will eat you up, I decided to call out Monday's expiration on this candle. And the reason why I even entered on this candle is because not only do you get the breakdown here on this candle below pre-market low, but you got to wait and make sure that it actually is going to go in your favor. And in this case, it was, guys, because check this out. This is a long wick to the upside. And a long wick to the upside means that sellers are stepping in. Buyers tried their absolute best. At one point, it was a super big green bullish candle, but sellers decided to step in and take control and close it below pre-market low. And on top of that, it's below the 90 EMA, rejected it as well. And so I decided to do a nice call out for some puts here, and they printed nicely. My first price target was this most recent candle here, which is where I actually sold at 13%. And as soon as I get out, they ended up climbing even more for about 26% and probably even more. It was a very fast drop. As soon as I get out on this candle, breaks down even more faster to the most recent low here. And those contracts ran from 180 a piece. I got out at 204 a piece, as you guys can see, and they ended up running to 224. Hindsight, my favorite, looking back at it now, trusting the trade plan in this case and making sure that we actually hit the second price target would have been a better exit. But 13% is still pretty nice on a single trade. But a nice price target at this very low of this wick or this candle here is nice. That would have been a 26% gain. Obviously, hindsight in my favor. Now looking at it, you just can't tell. It's the last 45 minutes of the market being open, dropping below pre-market low, and you just never know what's going to happen. Of course, nobody knows. But in this case, looking back at it now, holding until the second price target and trusting the trade plan, drop below pre-market low for some bears, rejecting 9 EMA, second candle closes below the pre-market low as well. Second price target is a better exit area. Now, that was the first trade on Monday. Waited so long just to get my first trade. Basically, 45 minutes till market opens or closes. 6 hours of waiting for my first trade, and that was the first trade. So the first trade ran from 171 an entry all the way to $204 is where I exited at, and it ended up running to 224. Now let's talk about the second trade, which was SPY calls, and this was a trade on Wednesday. The reason why I didn't do no call outs on Tuesday was because it was election day and we just did not know how the markets were going to react. So I didn't do no call outs that day just to keep it safe, keep it professional. Don't want to call out any bad trades. So I decided to wait till Wednesday to do my next trade, which this trade did really well as well. This one was a 23% gain on a single trade, and I enjoyed this trade a lot. So this trade was a 30-minute hold, and as you guys see, here's my contracts here. I got it at 9:15 and I sold at 9:48 a.m. So over a 30-minute hold, just about 33 minutes. And let's talk about this one. Why I even entered, what was the trade idea, what was the plan, and why did I spot calls and why did I call it out? So I called out this trade at 9:15 a.m. And the reason why I entered is because we get a nice decent trend break. And it was very funny because somebody was in my TikTok live when I was live talking about this, telling them that I'm waiting for a breakout on this. And, you know, of course, haters are going to hate. They're going to say something. But they said, wow, drawing lines, not going to work, buddy. And it ended up working. Because the reason why I entered this trade is because you get a nice downtrend here. All I do very simply is connect the wicks. I don't do what most people do, which is connect candles. I see that. It's just a little bit weird to me. So I connect the wicks. So if you connect all the wicks, you get your first breakout here. Then I waited for actual confirmation because the volume isn't that strong in my favor, but we are following the 90 EMA and we're finally above the 90 EMA here. So I decided to wait for this trade to stay above the trend and not do a fake out. And that's why I entered on this candle right here. Reason why I entered on that candle right there is because, guys, check this out. If you read candles, and candlesticks is kind of my thing. I love reading candlesticks, and I cannot emphasize the most that traders should be trading candlesticks as well as many other things that they do. On your charts, there's always candlesticks on your screen. Whether you trade futures, crypto, forex, does not really matter. Candlesticks are always on your screen unless you change them. They're just defaulted there. So you should understand how to use them in your favor. And in this case, guys, these two candles right here are representing buyers are stepping in. Long wicks to the downside indicate that sellers at one point tried to sell off this candle, but buyers stepped in and they took control twice. So I decided to do a call out here and say, you know what, let's get into some calls here, guys. I said play it small. Market conditions are wild. You just never know. It's the day after elections, so we got to be cautious. Now, it did take some time for it to actually pump up because it took over 30 minutes for me to get some good gains, 23%. And if you follow the 90 EMA, it ends up just following the 90 EMA, which is why I love following the 90 EMA. So I enter at 9:15 a.m. I sell it on this candle here, not at the very top. I sell it at 9:48 a.m. when this candle starts getting some momentum to the upside, and I decided to, you know what, let me just sell here. 23% is a good gain. But this is where I failed at, guys. This is what I'm learning in hindsight in my favor. Of course, that I'm trying to take these lessons into next week, because what could have been done better is the fact that I need to put my stop loss and follow the 90 EMA. If I have followed the 90 EMA all the way up, these contracts ended up following the 90 EMA perfectly to the T and printing so much more money. These contracts ran from $93 a piece all the way to $275. So what I need to do next and take this lesson into next week is when I hop into a trade, I need to trust the trade idea, to trust the trade plan, and understand that I can actually have some room to follow the 90 EMA to the upside. Now, like I said in my most previous vlog, I'm trying to learn to hold as much as I can and maximize off single contracts or 1 to 2 contracts. It doesn't really matter. However much I have, I'm trying to do my absolute best to maximize as much money as I can on a single trade. Instead of trying to scalp my way up to the top, I want to maximize and take good gains off a single contract. So in this case, and even the trade like I did and called out on Monday, I'm learning that if I just follow my trade plan and understand that I can cut below the 90 EMA or above the 90 EMA, you can get paid a lot more. Now, of course, there are many other factors that you got to weigh in. It's not as simple as just reading candlesticks and understanding volume in 90 EMA. Of course, there are things that do happen: lower lows, lower highs, market structure, market trends. Market might not all be moving together at the same time, upwards or downwards. So it's very difficult to capitalize all the time. But in this case, this was a very good trade to the upside. So that was the second trade that I called out on Wednesday this week. And like I just mentioned, I'm learning a lot. Hindsight in my favor, of course. I need to do my best to hold and trust my trade idea, trust my trade plan, because they can gain a lot more money. Now let's go on to Thursday's call out, because I believe that call out was a bad one. So here's Apple, guys. I called this out at 9:09 a.m. and this one was a little bit tricky because I kind of chased it a little bit. Now, where I got out was not a bad idea, because we did have FOMC this day, Federal Open Market Committee. Jerome Powell was speaking about the interest rates at 11 a.m. I entered 2 hours beforehand and ended up holding this trade for a very long time, almost to the point before he even hopped on. But I called out at 9:09 a.m. Apple 11.8 call, which is the end of the week. 225 call at 245 a piece. I said it's going to consolidate here before more higher highs. It's right at a resistance level. Now, I deleted my resistance level, but it was somewhere in this general area. It was a big range. These contracts did end up hitting over 10%. As you guys can see, they went from 245 to 272 a piece, and they consistently hit that a lot of times. And let's talk about this. The reason why I even entered this trade in the first place was because it is a cup and handle here. You guys can see it's a cup and a handle. And for anybody watching my screen, it's a cup here and a handle breakout trade to the upside. This was the actual initial break, but I didn't catch it. I didn't capture that. Reason why I didn't capture that is because I did not want to chase. What I didn't want to do was hop in too early, even though these candles are representing buyers are stepping in, and this candle right here is somewhat of a breakout to the upside above these most recent highs. But the volume wasn't there for me to really get a nice confirmation. It was following the 90 EMA. It is a bullish cup and handle pattern, so there's two good reasons, but I still didn't pull the trigger. Now, it literally rockets after that with strong buyer volume. So in this case, I really expected us to continue on to the upside, and we didn't, which is totally fine, guys. Some trades are not always going to hit. You're not going to be consistently profitable on every single trade that you take. But in this case, guys, I entered at 9:09 a.m. So I entered on this candle here before the candle even fully closed, but I like the fact that we got a long wick to the downside, indicating that buyers are stepping in. Strong bullish close after I hopped in, and this next candle was an indecision type candle, meaning that they don't know where the direction really wants to move to. And then the next candle ended up pushing up above as well, which is where I saw these contracts go from 245 a piece to 272, and it was nice. And I kept saying, move your stop loss at the 9 EMA on 15-minute climbs. Can take out here at 272 a contract, 10% gains. but I'm shooting for more. I said this trade's either going to stop me out or push me 25% plus. And at one point, they even hit 278 a contract. But I said, let's get a fat push, guys. At this point, Apple starts coming bearish, looking a little bit concerning, and we come here to the 90 EMA. Now, I close on this candle here because it actually officially did close below the 90 EMA. Now, Jerome Powell was going to hop on within the next 30 to 40 minutes, so I did not want to risk it at all. I didn't know what he was going to do. I didn't know if he was going to tank the market. Now, I'm not even going to say, oh man, I should have just held, because you just never know what's going to happen. Especially with these 3 candles right here, I probably wouldn't have been able to hold. Now, I was holding the 90 EMA pretty decently well, but on this candle right here, it officially closed below. So I just had to stick to my trade plan, and as soon as you get it close below, I sold it for a loss of $19 on a single contract. And you guys can see here, I alert when I get out. I said cut for a $19 loss, and I alerted everyone. I just alerted everyone. Now that was a really long hold. I got in at 9:09 a.m. all the way to 10:47 a.m. So it was a very long hold, as you guys see. Now, I'm actually not too sure where I could have done better on this one. I'm looking at it with hindsight in my favor. Maybe you held on the 90 EMA, but it got an official close below. So I stuck to my trade plan, which is close below the 90 EMA, and we got to close below the 90 EMA. So on this one, I'm not too sure where I could have actually done better to maximize more or even hold out on this one, because there's no way I would have been able to hold for this long. So with that being said, that was a loss on my end for this Thursday that I called out on 11:07. And now let's talk about Friday, because Friday I called out one banger ass trade. But then the last trade that I called out on AMD ended up eating all my gains for the day, as you guys saw in my most previous vlog. But the first trade on Friday was amazing, guys. And let's talk about that one. So this is my first trade on SPY. And in the morning, I was watching for this call level at 596.68. And the reason why I was looking at this level is because you guys can see here, every single time we hit this general area, even in pre-market highs, that's that exact level, 596.68. So that's very easy and simple trade idea. It's a breakout trade. As soon as you get a candle close above, you're supposed to enter. But there's 2 different strategies that I use personally. I have an aggressive entry, which is where you just enter as soon as you get a candle close above on that candle close above. But a lot of times it likes to come for a retest here and there. And in this case, it did come for a retest, but I didn't even enter on the retest because it was a big pullback. Mind you, this is all-time highs as well. This is SPY S&P 500's all-time high. NVIDIA was hitting all-time highs. You just never know when it's going to continue on hitting all-time highs. So it's very difficult to hit price targets because there is no levels above here. There's nothing. It's just going to continue on buyers stepping in. So in this case, the reason why I entered on this trade, guys, is very simple. Like I said, there's 2 different strategies you can use. You can use the break and retest, which in this case, this is the break right here. This is the breakout candle. Decent buyer volume, not even decent, very strong buyer volume, especially if you compare it to the opening first 15 minutes of buyers. And look at this, guys. Look at the volume. Look at this candle. Inverse hammer. Represents sellers stepping in. Look at the volume too. Perfect representation of that type of candle. But in the next 15 minutes, buyers took control. It's above the 90 EMA as well, and it broke above that call level as well. That's the breakout, and this is the retest. So that's the break and retest strategy. You can easily enter on those type of trades, but the reason why I didn't enter on this specific break and retest, even though I was waiting for a retest or retracement back down, is because it was a pretty big dip. It was eating 75% of that candle, and I wasn't sure how long we were going to continue on breaking new all-time highs. So I just didn't trust it for a retest entry there, although that was a nice entry break and retest strategy. It would have been paid nicely. So I decided to wait and give me some time. I needed some confirmation. So what was the confirmation for me? The confirmation for me was this. As soon as I see a nice candle close above again, the most recent candles, that is a perfect signal for me to trust that bulls are stepping in for sure. So with that being said, I decided to wait again for another 15-minute candle close, and I entered on this candle here, guys. As you guys can see, I called it out at 7:30 a.m. for $103 a piece, and this is 7:30 a.m. right here. As soon as you get a candle close above all these most recent candles, I decided, you know what? Market does want to pull up here, and they do want to continue on buying some all-time highs here. So I entered there. And I even said, follow the 90 EMA. Stop loss is pretty much below 596.68, but let's follow the 90 EMA. This is all-time high, so be mindful, gang. And 10% was on this candle here. Now, it did dip down here pretty hard, as you guys can see, and it did put me negative like 3 to 5%. So it was very concerning for a quick second, but buyers stepped in again, long hammer type candle, long waisted downside indicating that buyers are stepping in. So after the buyers and bulls stepped on this candle, this pushed us all the way up to 12 to 15%. Now, on this candle here is where I exited for a nice 21% gain. 131 a contract, and the entry was 103 a piece. But I got filled at 108. Now, with that being said, although this was a very good trade, there's many things that I could have done a lot better on this trade to maximize more profits and capitalize on more gains. Reason being is because I even said it in my trade call out. Follow the 9 EMA. Now, it would have been real tough for me to honestly hold through this noise here because this looks very bearish. Strong seller candle, long way to the upside. Seller stepping in there. Big seller candle here. Buyers on the volume is nowhere to be seen. Do not get me wrong. I most likely would have been very concerned and said, wow, this is eating up all my gains that I just made. I was up 20%. Now we're back down probably like 3 to 5% here, maybe even negative 10%. Now, with that being said, following the 9 EMA on a nice uptrend of all-time highs break is probably ideal more for this trade. If I would have followed the 9 EMA, which is the lesson I'm going to take until next week, when I hop into a trade that's trending upwards or downwards, if I follow the 9 EMA, I can trust that my trade plan will hit and it will continue on creating new highs on the day, whether it's all-time highs or just in general if I'm in a call long position. Because it ended up pulling up here with the 9 EMA and following the 9 EMA perfectly. Now, these contracts ran significantly crazy amounts of money. I don't even know the number, but when I look back at it, it was well above over $300 on the day. Now, with that being said, guys, that's what I'm trying to say. I'm taking these lessons into next week to understand that I need to do my absolute best to hold and trust the trade plan as far as following even the 9 EMA for a breakout to the upside, because this was a very good trade. Even 21% gain is not bad, but it could have been a lot better. And that's the lesson I'm going to take into next week, is the fact that I need to trust my trade plan. And that's what, if you guys have been following my vlogs and watching them as well, you guys will understand that in every single video, I always talk about how I'm doing my absolute best to hold as much as I can. 21% gain for me is pretty solid, but it could have been better. It could have been better. So next week, we're going to take this lesson into next week and learn that we need to hold as best as we can, guys. So with that being said, let's go into our last trade on AMD, which was a horrible call out on my end. I'm very sorry if anybody took that one, because this one practically ate up all my gains, considering that I was in 4 contracts on this one. The setup was not bad, but market was continually breaking all-time highs consistently. Now, as you guys can see here, I did the call out here, AMD 11.8 puts, which is the end of the day. Same day expirations, 148 put at $43. Now, they weren't even in the money. They were at the money because it was 11 cents away. So maybe in the money would have saved me a little bit more, although the contracts premiums were only like $100. It probably would have saved me a lot more as far as losing value on them, because theta, time decay, and the delta as well. But let's talk about this trade idea plan. Let's talk about this trade plan, guys, because this was actually a very good trade setup as far as the breakout. As you guys can see here, head and shoulders, left shoulder, head, right shoulder, a nice breakdown candle below all the most previous candles and wicks. So this was a very good setup. Like I said earlier, there's 2 types of strategies that I use. And the reason why I use the aggressive setup sometimes more often than the break and retest, although the break and retest has been showing to strategize and pay me a lot more money than the aggressive entries, is because many times when I take the aggressive entry, it just starts to rocket right away, instantly in profits. Now, in this case, the break and retest strategy was more in favor here, and I'll talk about that as well. But let's talk about the entry that I called out. I called out the entry here on this candle right here, guys. This was the entry. Now, I even said in my Discord and the free Discord tab that I'm looking for a retest. But I did not officially wait for a strong retest. I just entered because I did not want it to run off without me. I thought the market was going to continue downwards as far as AMD, but SPY had other plans. The S&P 500 was continually making new highs, SPX as well, the ES as well, MES and MNQ as well. All of them were consistently pushing to the upside. So it was influencing my AMD just a little bit. So I entered here for 43 apiece, negative 50% here on the actual retest, which was a probably more better probable setup in your favor. So this is the actual retest here. An entry here would have saved me so much more money. Instead of being down 50%, my contracts would have got in for only $20 a piece. Definitely would have been able to hold through this little double top, but I ended up selling on this candle here, guys. As you guys can see on the exit, I exited at 11:31 a.m. So actually it was this candle right here, but I did not exit exactly at the very bottom because I would have got a little bit better exit. But instead I actually exited at the very top because I thought it was going to continue on up to the upside since the market was pulling up here as well. So this one was a very bad loss. I took these contracts from $44 to $14 a piece. Very bad value as far as entering $44 and losing about 50 to 60% on these trades. On this trade specifically. Now, what could have been better was an entry. A break and retest strategy could have been better on this specific trade. The trade setup was not bad, but my entry was horrible. It's almost difficult sometimes to tell which one's a better setup because many times, just like Google on Thursday took off without me. I was looking for a nice break to the upside. As soon as it broke to the upside, it just straight, every candle was a new high every single time. In this case, we got a nice breakdown, but it decided to retest here to the 9 EMA. So I believe now, next week, I'm going to do my best to either enter at the retest of the 9 EMA, stick back to the break and retest strategy just to have better entries and make sure that the market doesn't pull up without me, and make sure that market does an actual retest for better contract price premiums. Now, in this case, this trade setup was good. My entry was horrible, guys. Entry call out was horrible. Like I said, I entered here, exited here at the very top though, not the bottom, very top. A better entry would have been here at the 9 EMA actual retest, or the actual retest of this Fibonacci retracement level, which would have been a better entry. I would not have been down so bad, considering that we did close above, but it's just a reject. It's just retesting and taking some time. Now, I did manage to actually enter for some two $18 contracts here for a nice breakdown for a little bit of a recovery on my end, just to save myself some money, so I'm not down so bad. I actually recovered just a little bit, not that much though. But either way, guys, a break and retest strategy would have been better for this one. And that wraps it up for all the trades I took and called out this week in my tab. Now, if you did take one single contract out of every single call out that I did, then you would still have ended the week green. But it's just the fact that this last trade was a pretty bad one on my end. So 2 losses, 3 wins. So I'm 3 for 2 on this week so far. And let's have a better week next week, guys. So I hope you guys learned from my lessons as far as when it came to specific trades, or even the trade setup technical analysis wise, better entries, better exits, because every single day we're going to get better, guys. So I'm going to do a recap every end of the week at the weekends to show you guys the trades that I took as far as the exits, the entries, and let's talk about it, stock talk about how we could have done better. And I hope you guys learned from this as far as me also learning from this too. So let's have a good, awesome week this week coming up. Whole bunch of earnings reports. So I hope you guys have an awesome weekend, and I'll see you guys in the stock trading Discord this week coming up, guys. Let's kill it, guys.